Welcome back, ladies and gentlemen. You're watching India Tonight with me, Sumita Karir. And a big story tonight. Well, global banking major DBS Group expects a 10% reduction in its workforce over the next 3 years as artificial intelligence adoption goes deeper into the company's operations. Its chief executive, Piyush Gupta, has said. Gupta added that AI is different and unlike any other technologies that have been adopted in the past. He also added that he's struggling to create new jobs for the first time in his over 15-year stint at the helm of the Singaporean bank. Now, attributing his outlook to the advent of AI, Gupta said, and I quote, "AI is very powerful. It can self-create and also mimic." Pointing out that AI is different, Gupta said that in the last 10 years, there have not been any job cuts in the group. Meanwhile, in a separate statement, the company has said that the reduction of 4,000 employees over the next 3 years will primarily involve contract and temporary staff. So, is India Inc. really going through a crisis with respect to jobs because of the advent of AI and other factors? To discuss this and much more about this crucial story, we're now joined by Shantanu Rooj, the founder and CEO of Team Lee's EdTech. Thank you very much, Shantanu, for joining us here on ET Now.
Thank you so much, Sumita, for having me here.
Shantanu, my first question, and we'll talk about DBS Bank and what's happening at Infosys in just a short while from now. But let me take you back to India's finance minister's statements. She stated earlier this month that the country's unemployment rate had dropped to 3.2%, which is down from 6% in 2017-2018. She said that there's been an improvement in India's employment landscape. But then you have DBS Bank stating that the company is struggling to create jobs. So what is your overall assessment of the matter? Is this a failure of leadership, or is India actually going through a severe jobs and employability crisis?
So, Sumita, I think both of these questions are slightly different, and let's look at them at perspective. What the finance minister said about reducing unemployability in the country is not a fake answer. It's actually true. But the devil lies in the details. If you look at it, close to about 57% of the working people in the country today are self-employed. People who want a job actually have a job today because the poor cannot afford to remain unemployable. The problem is not about the availability of jobs. The problem is about the wages that they deserve, that they want to be able to make their livings. I think the problem lies there. India doesn't have an employability, it doesn't have an unemployment problem. It has a wages problem. That's the biggest problem that we have. So, I mean, the poor cannot afford to remain unemployable. And that's the reason they get into some sort of a self-employment, right? So they pick up anything that's available, even if that's not at the right wages. That actually defines the 3%, 4%, or the 5% unemployability rate that we have been advertising all this while. The challenges that the DBS CEO talked about is for a very different strata of the society, people who are into formal job roles. And that's the place we are seeing a large amount of displacement. That's the impact of AI. I think there are a lot of jobs which are repetitive, which are in the low end or operational things, stuff which can be automated by AI because AI is powerful. It can write its own logic given the input and the expected output. It can create all of this itself. It's actually intelligent that way. And that's where the displacement lies. I think the DBS CEO is talking the obvious thing that a lot of their jobs which are going to get automated, and he's struggling to figure out how does it create more jobs there. I think these two domains are very different domains that we are talking about. What the finance minister spoke about and what is the DBS CEO talking about.
So you're agreeing with the finance minister and agreeing with the fact that unemployment rate in the country has actually dropped?
Yes, unemployment rate in the country has actually dropped. My challenge here, Sumita, is that people who need a job, who want a job in this country actually have a job. The problem is they do not have the type of wages that they need to, right? So a poor person today cannot afford to remain unemployed. So he picks up whatever is available. He starts working in the farm where possibly two people are good enough. Now, because the other two sons do not have a job, they go and start working in that farm. So are they unemployed? They're not. They're still working somewhere. They're earning something for the family, but are they actually earning adequately? Is it actually signaling the type of wages that they deserve? I think
Right.
that is where the problem is.
Shantanu.
There's a lot of pseudo unemployment.
Right, so you're essentially stating that this entire problem that you're seeing, whether it's related to DBS Bank or other organizations who claim that there are not enough people, workforce is limited, they don't know where to hire, is essentially a wage crisis. But Shantanu, isn't it also a skilling and reskilling issue? Because the CEO, the DBS CEO, very categorically stated that AI, and he's not really seen this kind of a technological revolution and has not faced any challenges in the past 15 years. But this has been spoken about very many times by industry leaders, by industry organizations and bodies, that skilling needs to be done. When we speak about India having, a huge demographic dividend, the main point is whether our workforce is indeed skilled enough to take those kind of jobs or not. And hence, the buck really stops with organizations who may not be investing as much into skilling.
Sumita, you're actually right in that case. So the problem, if you look at the disruption being brought in by AI, is not the type of disruption that we have seen ever in the past. This is a very different type of a disruption. I have been a discussion in the panel of so many discussion panels where we discussed about whether AI is going to take away jobs or is AI going to create new jobs, right? I think none of us know the answers, right? But one thing is for sure, AI is actually reshaping the work in itself. I think that is where the things come from. While the entire world moves towards adopting AI and whatever format of AI, the question remains that whether the same people who are being displaced by use of AI, whether we will be able to reskill the same people to the higher level job roles. That's a tall challenge. That's where the biggest challenge will lie. There would be a lot of people who possibly will face disruption, will face displacement from their current job roles, whereas it will create new job roles, but they may be for a different set of people who would need to possess a very different type of skill sets. I think the rate at which AI is being adopted, and if you contrast that with the rate at which we are actually upskilling, there's a lot of gap there. A lot can be done, right from reforming university education, college education, school education, and the reskilling and upskilling that's being done by organizations and enterprises. I think there's a lot to be done there.
Absolutely, and we've kind of missed the bus, especially as far as retaining people in those jobs is concerned, especially those that are driven by technological developments. On the point of skilling and reskilling issues, let me take you through some data, Shantanu, on the graduate employability rate. Now, Tier 1 colleges only have 48.4% people who are employable. Tier 2 colleges slightly lower, and of course, Tier 3 colleges are even lower. So the point now is, how severe is this going to get in the near term, in the next few years?
So, Sumita, the stats that you're talking about isn't a manifestation of something which has happened just in the recent past. That has been Indian history for the last so many decades, about the over regulation in the higher education segment, where we actually throttle autonomy, and that has actually harmed us a lot. But I'm glad that, driven by NEP, lots are changing there. The government of India is making a lot of initiatives to reform higher education to ensure that there is a humongous component of skilling and skill building alongside formal education. I think things are changing there, but then a lot can be done still in this particular space.
Absolutely. And, Shantanu, there is DBS on one side. Then, of course, there is Infosys also that reportedly is laying off people. The numbers are varied. The numbers are different, what the company states, and, of course, what, the terminated employees say. We also saw, due to AI, Paytm last year also laid off people. And of course, the company made no bones about that fact. And of course, at NASSCOM as well, we've seen industry leaders, the tech summit that's currently underway in Mumbai. We've seen that IT sector experts and of course CEOs have categorically stated that because the business models are changing, it could have wide-ranging ramifications on every aspect of the business. Again, the point comes back to how much have they put in reskilling of their employees rather than just letting them go. But I want to also draw your attention to the other big issue, and we've spoken to economists over the past very many days on the jobs issue, and they state that a majority of jobs which were to come from manufacturing haven't really come back, haven't really been generated because manufacturing as a sector has contracted. Have you seen jobs go up because of manufacturing? And do you think this can really be a pillar to sort of boost jobs which will be non-AI driven?
So here, Sumita, I think we have conducted a couple of researches and we recently published a report about the outlook of employers in willing to hire freshers into some job roles. And our research pointed out that industries like manufacturing, industries like infrastructure, construction, startups, e-commerce, some part of telecom, healthcare, I think these are organizations which are actually looking at adding a large number of freshers because of the trend on upskilling there. Manufacturing in India is obviously growing, and there are sections inside, be it electronics, be it semiconductors, be it automotive. I think there are sectors which are growing massively, and those sectors are very bullish about hiring freshers. One of the reports that we published from Team Lead Tech just about a few weeks back says that about 74% of the employers that we actually surveyed were very bullish about hiring freshers in the next 6 months for creating their own talent pipeline. I think I'm very bullish about the manufacturing sector, infrastructure, construction, e-commerce, the technology startups, all of these guys actually hiring a large number of freshers for the job roles.
All right. Well, on that note, thank you very much, Shantanu, for joining us and sharing your perspectives on the crucial story. Remember, India is at a crucial juncture concerning youth employment, given that it holds the potential to harness its demographic dividend or advantage. And if it truly wants to capitalize on that, well, job creation, skilling and reskilling is something that needs to be looked at with priority. On that note, thank you very much, Shantanu, once again for joining us. And ladies and gentlemen, the Indian IT industry is on track to cross $300 billion in revenue by the next fiscal, and that's the word coming in from a NASSCOM survey as leaders converged today at the Tech Forum. At the 33rd edition of the NASSCOM Tech and Leadership Forum, optimism was abound despite global volatility. My colleagues Anurag Joshi and Anjali Pallod get us the top highlights. This is from a report that they filed earlier in the day.
NASSCOM's Technology and Leadership Forum 2025 kicked off today, and this forum, a gala event for the tech industry, brings together the biggest thinkers and business leaders and policy makers under one roof and one platform to discuss about the future of technology on Indian corporation and societal trends, and also its impact globally. Some of the key milestones that this time's NASSCOM forum have set include the NASSCOM report, which is forecasting revenues of the industry growing to $300 billion. And right now, as on FY26, in this financial year, it is at almost $283 billion. So it's quite a close catch-up. I have Anjali Pallod, who will give more of an insight about the report and about the deliberations today.
That's right. As you've mentioned already, the NASSCOM report did highlight the kind of growth that the Indian tech industry is expecting in the coming year. Where we've spoken about the revenues, the report also highlights the kind of jobs that will be created. So in FY25, the report expects 126,000 jobs to be created, and that the industry would be a net hirer with 5.8 million employees added to the industry. Now, more growth was seen in the engineering R&D, which grew at 7%, and the report also highlighted the growth in GCCs, especially in the AI capabilities of these GCCs, which is now crossed 500 plus GCCs today have AI capabilities in India. Other than that, some key announcements were made here at the NTLF, one of which was on the job creation side. So while we're talking about job creations, the group CEO of DBS Bank did highlight that over the next 3 years, the bank will see 4,000 job cuts that will come from better AI efficiency. So that's what we're picking up so far from this forum, and we'll bring you more updates soon.
All right, ladies and gentlemen, that's a report from Anurag and Anjali from day one of the NASSCOM Technology and Leadership Forum. Tomorrow will be day two, lots of exciting speakers. And you can definitely tune into ET Now for all live updates from the Tech Festival. But moving on, ladies and gentlemen, well, 361 Assets PE Fund has sought a fast-tracked approval from IRDAI for acquiring a 15% stake in Bharti AXA Life Insurance. This comes as IRDAI had eased investment norms for private equity funds in insurance companies. Anurag Shah, my colleague, is joining in with more details. Anurag.
Fund managed by 361 has announced about buying a stake of 15% in Bharti AXA Life Insurance company, and they have applied for regulatory approval also to regulator IRDA, and as per our sources, company, the fund is likely to get the approval also, and our sources are also telling that now IRDA will fast track the approval of investment made by PE firms, because this used to be a concern of PE firms that IRDA approval used to take a lot of time due to the investment structure of PE firms and due diligence which IRDA need to done. But going ahead, the approval process will be fastened, and we have seen that rules for investment by PE firms also got amended by IRDA. Previously, it was restricted up to 10% only, and above the 10% the SPV need to be formed. But now that rules has been changed, and PE funds can invest up to 25% in an insurance company. So to attract more and more capital, IRDA changed the rules, and going ahead we'll see that a lot of PE funds will be investing in insurance sector, life insurance companies, general insurance companies. There is a lock-in period of 5 years for PE fund, because insurance is a long-term business. Long-term companies need a time to make profit, and for that purpose only there is a lock-in period also for PE fund in insurance company, which is 5 years. So IRDA is going to fasten the process for approving investment made by PE funds in insurance companies.
All right, thank you very much, Anurag. And ladies and gentlemen, we have a story coming in from the PSU banking space. Well, the government has invited bids from merchant bankers for select PSU banks and financial companies stake sale, which is open till March the 27th. My colleague Ankur Mishra is here with more details. He's joining us on the phone line. Ankur, take us through the modalities that the government is thinking of for the stake sale.
The government has invited bids from merchant bankers for select PSU banks as well as financial companies stake sale. Now, DIPAM to impanel bankers for 3 years, and that will be extendable by 1 year as well. Now, this whole exercise is on till March 27, whereby the bids for impanelment are open. And impanelment under 2 categories will be there. One is A+ for deals more than 2,500 crore, and one is for A for smaller transactions, which government is looking to dilute the stake. Now, these selected bankers need to conduct market surveys, roadshows, and investor meetings. The government has already made the sale criteria clear. There is no clear-cut target which was set up for any financial year. But overall, DIPAM may select one or more bankers as per the transaction or as per requirement.
Thank you very much, Ankur, for filling us in on that crucial story. Ladies and gentlemen, reiterating once again that PSU banks and financial companies a stake sale, well, the government is looking for that, and it has invited bids from merchant bankers. It's open to March 27th, and there are 2 categories, like my colleague Ankur was mentioning, in terms of transaction value. And with that story, it's a wrap on this edition of India Tonight. Hope you liked the show as much as we did putting it together for you. Goodbye, and thank you very much for watching.